If you're retired, there can be a problem around taking money from your defined contribution pension because you might not necessarily know how much to take before tax if you want a certain amount of money after tax to spend. This could be complicated by things like getting money from other sources like dividend income or some sort of defined benefit pension, and then also the fact that 25% of your defined contribution pension is tax-free up to £268,275, and that amount might decline under the current Labour government. And that really reminds me of the Smiths song, "We Hate It When Our Friends Become Successful," because to me that really sums up Keir Starmer. So the order of withdrawal of your funds once you're retired is to use a general savings account first, because you've got capital gains tax, taxes on interest, taxes on dividends. Then to use an ISA, because that is income tax free but subject to inheritance tax. And then finally to use your pension. But then also you need to utilize your personal allowance. And this causes some people to use UFPLS for their first few withdrawals because they're taking most of their expenditure from an ISA, and then the personal allowance just comes from UFPLS. So here's an example where the person has no other sources of income. They want to utilize their personal allowance, and then they take associated tax-free cash with that. So they're taking a total of £16,760, and then the rest of their income that year will be coming from an ISA. They're fully utilizing their personal allowance, and they're taking the 25% tax-free under UFPLS. And with UFPLS, you take it like a salary, really. Generally, you take amounts every month, and the pension is taxed at source. So now if I change the example, put in a small defined benefit pension and some dividends, if I want the same required net amount after tax, utilizing the defined contribution pension, I'm now actually paying some money at the 20% tax band because I've got this extra income. So what I need to do is take that amount off what I'm requiring from my defined contribution pension, and then I'll end up paying no tax. So now in this example, I want £55,000 net after tax. So I have to withdraw £61,748 from my defined contribution pension, pay £6,748 in tax. I'm taking £15,437 of tax-free cash, which is 25%. And there I've got to the money that I want without paying too much tax or taking out too little from the pension. And now if I wanted to withdraw the total 20% tax band, it's telling me that I've got this £4,487 remaining. So I just put that into here. And then now what it's saying is that I'm taking the maximum 20% taxable amount and paying the $7,540 as tax. I'm making a gross withdrawal of just over 67,000, taking the 25% tax-free cash again. So now I've optimized the 20% tax band. If I've got any money left over, I could put that into an ISA. Then if I wanted to take out more money, it tells me how much I'm paying at the 40% tax band. So hopefully you can see how useful this file can be for tax planning, and also with the transparency of a spreadsheet, you can see exactly what's going on with the underlying calculations, and you can make any changes you want to get the spreadsheet working exactly how you want. Get hold of the file, go to my website and press the PayPal button, and you'll be sent the Google Sheet which has all the calculations on it. The workings of the file are also the decision engine of my retirement calculator, and if you want to learn more about that and how much money you can expect to live off in your retirement, then check out the video below. And also the file comes bundled in with my income tax calculator spreadsheet, and if you want to know more about that, there's also a file below where you can learn how that works.